everybody, this is Anna from HotOptionBabe.com. On the chart I have a screenshot of the crude futures. Now I like to do futures and I have done quite a bit of them. There's more I would like to get into, but lately I've really enjoyed doing the crude futures, and it's a pretty clean and reliable chart to trade. Now, looking at the 60-minute chart here, I've drawn the Fibonacci levels for you, okay, from our low of 80.28 to our high of 90.76, and you can see that it's hugging this 23.6% retracement level, and it is just keeps drawing right back to that every time. So we're talking about 88.28 as a level there. That's 23.6%. Now, if it were to break that, the next level you would look at would be 86.75. But make no mistake, I think the crude is going higher, and I'll tell you why. You have this move up, okay, from 80.28 to 90. We could come back and see 86, but right now, look at this sideways consolidation, and that normally ends up moving in a bullish up move when it's in this pattern. It's not 100%, but normally that's the way those play out. They do not usually resolve to the downside. So let's take a look at the daily, okay? Let's take a look at the daily here. Now we could draw our fib levels on this, but I'm not going to, because what we do have the oscillator. Oops, sorry about that. I do this all. It's so sensitive. We do have the oscillator running out of steam here, okay? But it has not crossed the zero line, which is not a confirmed sell signal yet. So for intraday, you know, you can trade the crude futures intraday and do pretty well doing that. So you just play your levels and make some money doing that. That's what we are doing in the lounge. Now here you can see we had an inverted head and shoulder, and it tried to push up here, but it couldn't make it, so it came back down to that Fibonacci area, and now it's trying to make another move higher. On the short term, we have a bullish oscillator. Yep, bullish oscillator, although it's a bit overdone on the 5. So next week's a holiday week, so we're going to see a lot of gyrations. I was telling somebody this weekend, my friend Caroline from Ireland, that I don't trade options on the futures, and the reason being, take a look, okay? If you said, okay, I think crude's going to 100 by, let's say July, or let's say March, okay? Let's say March for argument's sake. Let me close up January. I just want to show you with options what you don't want to do, okay? Now, this is TF. We want CL. Let's do CL. There's your crude futures, light sweet crude. We're going to look for, we don't want January, we said. We're going to look, let's say, I mean, we could even go to, see what they got available. Let's try March. Let's make it simplistically easy. It's got 32 days. Oh, we don't want 32 days. We want March, which is, how many days is that till expiration? 89, okay, 89 days. That's 3 months. That's quite a while. And in my lifetime, it's quite a while. Let's say we think it's going to 100. Okay, and that's where the most open interest is, by the way. Look at that. I picked 100. So there's a lot of people betting that crude's going to 100 by March. A lot of people. Okay, a lot of people. You don't see any open interest on the put side. You see it on the call side. You even have it at 105 too. But your biggest level is here at the 100 mark. Okay, let's say you want to buy. You want to go long. Look at the spread on this. Spread is from 0 to 220. Why in the world would you ever buy anything with that kind of a spread? I mean, to me, you never want to do anything with that wide of a spread. You're going to end up losing money more than not, unless you really, really are right. So in that respect, I wouldn't touch it with a 10-foot pole. Okay, I'd rather do the actual crude futures and not worry about this spread difference. You never want to trade with a spread more than 15 cents is my limit. Some people go a little bit more. Some people won't go above 5 cents. So you don't want to do anything with a huge spread. Even if you did the 95, look at the spread between the bid and the ask, 127 to 434. That's huge, and you just don't want to do that. The implied volatility is great. It's below 30% on just about every strike. So when you see, what you want to look for is implied volatility, the probability of expiring worthless, your delta. This is what I look at, open interest. Okay, your theta, I can pretty much figure out the theta, so I don't put that on my screen because it's just too much stuff. But let's take a look at like a stock like Apple, and I'm just trying to go over these things so it helps you with your options trading, because that's what I am known for, obviously. Okay, Apple's at 320, and let's say we think by March it's going to be at 350. Now look at this spread, 8.9. So it's still got a pretty big spread, like 25 cents. Okay, would I do it? It's a little bit wide for me, but I might do a vertical call spread on it. So, but anyway, the bid is 12 on the 340. The ask is 25. Still 25 cent spread. So it's pretty wide. I like them wider. I might do it for an exception, but normally my rule is 15. Now you see that volatility is fine. I mean, my rule is 30%. If it's 31 or 32, I might go for it, depending on how sure I am of a move of where the stock is going to go. And let's take a look at a spread. Let's say I think Apple is going to 340, but I don't want to put out all that money. I don't want to put out, what was the single? Let's pull this. I say I want to do 340. Okay. I don't want to put out, how much was it for a single? I don't want to put out $1,200 basically, or $1,215 for a call on Apple. That's one call. It's $1,200, $1,215. If I bet you it's $1,215. Yeah. Okay. So that's the middle. So your spread is from 1,200 to 1,225, and the middle will be 1,215, and they're always going to err on the side of the market maker. So don't worry about that. But they want that slippage. It's called slippage, and that's where they make their greatest money, is on your slippage. Okay. So if we go back to that spread, where I'm going to, instead of putting out 1,215, I'm bullish on Apple. I think it's going to 340, but I don't want to pay out $1,200. So I'm going to do a 340, 350. Now I'm only going to put out a quarter of that money, and I can still make a lot of money. Now this is what I want to show you guys. Okay, your bid is between 285, 330. It's a pretty wide spread, but on a spread, you're going to have that. So, because you got two different, you got one you're buying and one you're selling. Now you're doing a debit spread. So 308 is your debit. Okay, let's say I'm gonna take 308, and we're gonna change this to 1. We're gonna change this to 1. Okay. Okay, there you go. Now, there is your break even, 343. This is your maximum profit, $692. That's not bad for a $300 investment. I mean, that's pretty damn good. As a matter of fact, I might put this trade on. That's pretty darn good. You got plenty of time to be right. The only problem is a little bit too far out for me, because it's not going to work very. This is the kind of option spread that you put on and forget about until around end of February. So it's a little bit too long for me. So I would probably say, okay, well, let's try February. I'm just going over all this stuff to help you guys. Oh, it's even cheaper, and it's going to work faster. So 278, I'm going to make more money on that. Look at this. I could make $722 and put out less money, And I think Apple is probably going to go there. As a matter of fact, I'm going to queue this trade. So I gave you guys a little bit of a freebie there, a little free trade there that I think is going to work out. And normally, when I pick trades like that, they really work pretty fast. I'm usually pretty good, and they work pretty fast. So I'm gonna do this trade, and we're gonna go back in February and see how well we did on it, or sooner. Okay, we're gonna keep abreast of this trade and how I do on it. I might not put it on until after the holidays though, but I'm still going to be looking at this trade. So I've got it in my order queue, and we're gonna keep track and see how well we do on it. Okay, everybody, have a great holiday. Merry Christmas, Happy Kwanzaa, Happy Hanukkah, Happy Holidays, and I hope to see all of you in the new year. And I've got some good stuff that's coming up in the new year soon. So stay tuned. Bye.